Hey friends, it's another episode of Loss Ratio Reacts, and today we're breaking down a recent episode of Dr. Phil, entitled Beyond the Damage, the Insurance Catastrophe. For decades, Dr. Phil's daytime TV show has been synonymous with straight talk and often tough love. His own website states he has the unique ability to take complicated and technical information and make it accessible and understandable to the general public. So I was excited to hear Dr. Phil take the complicated and technical topic of property insurance, break it down into layman's terms, and get to the heart of the insurance issues facing the country. So let's listen in and hear what Dr. Phil has to say about insurance.
Quietly for the past few years, insurance companies have been pulling up stakes in California and other states where weather and disaster-related claims are common.
I hate to stop this so quickly, but I've got to interject here because I think it's important. Insurance carriers have actually not been exiting markets quietly. They've put out press releases which have been picked up by thousands of news outlets and broadcast far and wide. To say that carriers are leaving quietly implies that they're trying to be sneaky and is immediately painting a negative picture. Let's hope this isn't setting the tone for the entire show.
Christy and Michael know all too well how devastating natural disasters can be and how important insurance is. In the past 6 years, they have lost not one, but 2 homes to catastrophic wildfires. Can you imagine?
So we're introduced to this couple who have had the unthinkable happen. Their first home was lost in the Camp Fire in Paradise, California in 2018. Here's what happened.
We purchased our first home in Paradise, California, and lost it to the Camp Fire, the deadliest and most destructive wildfire in California history.
It was such an amazing house.
We lost everything, all our photos of our children when they were babies, photos of our families from the past, everything you could think of.
This is a heart-wrenching story to hear. I've been blessed to have never experienced a house fire personally, though I've walked through the process with several close friends and clients over the years, and I've seen the devastation firsthand. I've got all the empathy in the world for this couple. Now, listen to what happened after their first house burned in the Camp Fire.
We had really good insurance. Our insurance actually paid out enough to where we can purchase the house outright.
Okay, hold on. Let's pause right there and listen to that again.
We had really good insurance. Our insurance actually paid out enough to where we can purchase the house outright.
So for clarity, their home in Paradise burned to the ground in the Camp Fire. They had what this gentleman referred to as really good insurance, and their claim payout provided them enough money to purchase a new home in cash with no mortgage. So while certainly no amount of money can replace photos, mementos, heirlooms, it does sound like insurance did for this family what it does best. And in the aftermath of the Camp Fire tragedy, they were indemnified and able to purchase a new home. We aren't given any details on how that claim played out, which most often means that everything went fairly smoothly. There's no mention of a battle with the insurance company, no public adjuster, no attorney. If there had been, I'm sure those details would have been shared because this Dr. Phil episode is unfortunately about to turn into an insurance industry slamfest. But back to our story. Here's what happened to this couple after moving into their new home.
That insurance policy jumped up to $12,000. We could not pay that.
So let's get a little more detail on the premium progression for their homeowner's insurance on their new house.
What did your premiums go up to?
Oh, I believe the first year was roughly $2,200. The second year, I believe, jumped to roughly around $2,700. The third year jumped to roughly $7,000. Fourth year, our last quote, to where we decided this is something we can't do, became $12,000 for the quote because it was California Fair Plan to cover fire plus a secondary insurance to cover everything else. And we just couldn't afford that.
So it went up
something for us.
10x.
Oh yeah, it was.
$1,200 a year to $12,000.
Oh.
Make no mistake, a 900% increase in insurance premiums is absolutely shocking. But don't for a second think that the show isn't strategically edited and produced to elicit an emotional response. Insert crowd gasp audio clip, cut to shocked expression. You get the idea.
$1,200 a year to $12,000.
Oh, yeah, we felt like we were being punished.
They felt like they were being punished. And look, I get it. I'd feel the same exact way if my homeowner's insurance premium increased by 900% over 4 years. I can't even imagine. But to be clear, these rate increases had little to nothing to do with their previous house fire and claim, and everything to do with the location of the new home they purchased, which, like their first home in Paradise, was also located in one of the the highest wildfire risk areas in all of California. So if you had to classify the 900% increase in premiums as punishment, it would not be punishment for their total loss claim, but rather punishment for choosing to live in a high wildfire risk area. And before we move on, let me just say that this feeling of punishment for living in a high wildfire risk area by way of seemingly exorbitant home insurance premiums is not going away anytime soon in California, and will undoubtedly be felt more broadly and more acutely by California homeowners in the coming years. This is the new reality we're living in, and it's going to take a ton of work and commitment from all stakeholders to address these issues and implement solutions to relieve this premium pressure felt by Californians living in high-risk areas. So back to the story. This couple is unable to afford $1,000 a month for a FAIR Plan and DIC policy to cover their home. So because they have no mortgage, remember, their insurance payout on their first home that burned enabled them to pay cash for this new one, they obviously now have the option to forego home insurance altogether. And that's ultimately what they decide to do. And here's what happens next.
The evening that the park fire started, and it was initially just a warning, roughly 30 minutes after that first warning, we were loading our stuff into vehicles and hitting the road.
When we left, we thought we'd be coming home later. No way this was going to happen to us twice. We get confirmation that we had lost our house yet again.
It's a gut-wrenching feeling to think that, well, this happened twice, what says it can't happen a third time?
Again, I can't imagine what it would be like to lose 2 houses in 6 years. And for the second one to be completely uninsured is just devastating. But this is the difficult choice a growing number of homeowners are facing: the crisis of availability and affordability. Dr. Phil introduces 2 more guests on the show next. For sake of brevity, we won't dive deep on both of those, but the first is this couple who couldn't afford flood insurance and subsequently lost their home to floodwaters in Hurricane Helene, and this woman who lives in the Santa Cruz, California area who had this experience.
I live in Santa Cruz, California with my husband and my 11-year-old daughter. Fire just continues to be a risk for us. Last spring, I learned that we would be losing our homeowner's insurance. It felt like the end of the world. I called probably 50 companies that first week. We finally found a company that would write our policy, and we were so happy until the price came in. And the price came in at $24,000. We were paying $2,500 before. We would never be able to afford that.
So a family loses 2 homes to wildfire. The second home is completely uninsured. Another family loses their home to Hurricane Helene floodwaters, completely uninsured. And a third family can't afford skyrocketing premiums and lives every day in fear that a fire will take everything from them. All of these heartbreaking stories that tug at the heartstrings. And I think it's incredibly important to tell these stories, to feel the emotion and weight of loss. We'll certainly continue to be bombarded with stories like these over the next few months coming out of the LA wildfires, and those stories absolutely need to be told and heard. At the same time, an even bigger tragedy would occur if we let these stories fade into history without learning and growing and taking action to prevent them from happening again. This is where mitigation and resilience must enter the conversation. So let's see how Dr. Phil digs into discussion of these solutions.
Stephen Bush has 20 years of experience in the property insurance arena, and as an attorney, he's dedicated his career to representing policyholders across the country.
Okay, wait. Hold the phone. We're 25 minutes deep into stories of consumers who can't afford insurance because of skyrocketing insurance premiums for their high-risk properties, and now our insurance expert to discuss solutions is the director of business development for a prominent insurance litigation law firm? What is going on here?
You say that many insurance companies are thriving while their policyholders are suffering. How is this happening?
Well, that's a great question. How is it happening? How is the government, especially the state governments, allowing this? I'll give you a great example. In Florida, we went almost 12 years without a hurricane. So the insurance companies saw great profits during that time. We have one hurricane, and next thing you know, you have 7 insurance companies going bankrupt. So where is that money? And I think some of the studies that have been commissioned show that that money went offshore, and that many of the CEOs, like you mentioned, had big bonuses.
So Dr. Phil and our attorney friend clearly defined the problem for us right out of the gate. It's big corporate greedy insurance companies. And listen to the certainty and facts presented.
Where is that money? And I think some of the studies that have been commissioned show that that money went offshore.
You think some of the studies that have been commissioned have revealed financial impropriety? Seriously? That's all we get? Regardless, let's move on and see what else we can learn about the big bad insurance industry.
It's the same way in California. There are some of the major companies that have just moved out. They just won't insure. There are 3 or 4 of the majors that will not insure in California at any price.
That's right. There's certain sections of California where you can't get fire insurance at all. No insurance companies are insuring them for fire.
Now, this statement is just plain not true. The whole purpose of the California Fair Plan, the insurer of last resort in California, is to offer coverage where there are no other options. I've spoken with multiple California insurance agents in the past few days who have confirmed that the Fair Plan offers coverage statewide. So to say that there are certain sections of California that can't get coverage at all is just plain not true. There are plenty of valid talking points to illustrate the gravity of the current insurance crisis, but to manufacture and spread falsehoods is disingenuous at best and makes one begin to question motives. Now, I'm gonna wrap this up quickly, but there are a couple more minutes of this episode that simply cannot be glossed over.
You say you've had 15 or 20 clients that you believe died from the stress of all this.
Yes, I have had clients who have died during the claims process just from pure stress.
I'm not gonna lie, when I first heard this, my jaw hit the floor. In case you missed it, we just made a huge and jarring leap to a brand new insurance topic. We jumped from nebulous accusations and disingenuous falsehoods to people losing their lives from the stress of mishandled claims. If there was any doubt in my mind about the motive and agenda of this episode, it's now fully removed and painfully clear. And at this point, the episode devolves into a shotgun blast decrying the evils of property insurance companies across a pile of random issues, including
The adjusters come in, and that's when the war starts.
I also have had quite a few clients who have filed for divorce because of the stress and the pressure, the frustration of dealing with insurance companies. Repair estimates, replacement estimates are being reduced by as much as 90% across the board to prevent payment.
estimates are being reduced by as much as 90% across the board? What? What is being implied here? What is the inevitable takeaway from this show for the average consumer, 98% of homeowners? If you ever have an insurance claim, your insurance company will reduce your claim payout by 90% across the board. That statement is absolutely preposterous, but not terribly surprising coming from the business development director of an insurance litigation law firm. It turns out this entire episode is essentially an infomercial for insurance litigation, leveraging the emotional insurance stories of 3 families who, ironically, have not had any need for the services of an attorney in their insurance stories. Now, the remainder of this infomercial, masquerading as an episode of Dr. Phil, is exactly what you'd expect. More of this.
The only way anymore to get paid properly to get your coverages is if you hire either a licensed public insurance adjuster or an attorney.
Some of this.
They silence them and they play the waiting game, hoping that they just go away. They deny.
Did you catch that subtle pause there? I think I know what he wanted to say there, but rightfully thought better of it at the last second, so I will give him credit for that. I've gone way too long here, but let me wrap up with a few final thoughts. Plain and simple, we are in the middle of an unprecedented insurance crisis in the United States. Real people, like those in this episode, are hurting. And when people are hurting, it matters. Big problems need big solutions. And when the big problem is something as complicated as insurance, real-world solutions will take not just cooperation, but true collaboration between all parties of the industry. This means understanding, acknowledging, and taking ownership of the role that each one of us plays in contributing to the problems. I'm convinced that the dollars saved by cutting corners in the way that we assess risk and adjust and and resolve claims, those dollars are lost tenfold on the back end through increased losses and litigation and the continued decline in consumer perception and confidence in the industry. It's a vicious spiral with no good ending, and we can't let that be our demise. As a not-so-famous rapper once said,
"Resilience, mitigation, education is the key. Leverage data, analytics, and don't sleep on IoT. Can't repair, replace your way back to an underwriting profit. Predict and then prevent, jump on the innovation rocket. Underwriting's the foundation to a strong and healthy book. You don't know what you can't see, but self-inspection lets you look.